Thanks for checking out this video from NetPicks. And today I'm going to cover something, 3 ideas to help improve your trading. And it's a good time for this because the last few videos I put up are about trading strategies. So this will be pretty timely. And let's be honest, most people have a hard time finding any sort of consistency in their trading approach, right? Whether it's the risk they're using, position sizing, keeping the focus on your trading method. Let's put this one out there as well. When you're faced with losing trades, a lot of people have either switched trading methods repeatedly, or worse, they just start to ignore proper risk protocols. Maybe you let your emotions get ahead of you. It happens to all of us. And once that happens, sometimes it's a downward spiral, and a lot of times you can't even recover from that. But honestly, even professionals have bad spells in the market, but they're professionals. So they have the ability to pull themselves right back up. They regain that professional approach that's given them their success. And as long as there's still money in your trading account, it's not too late for you to become a professional. Maybe not a paid professional, but a professional in how you approach the markets. Now, you don't need groundbreaking ideas to turn your trading around. In fact, I put a video together called the Daily Chart Trading Strategy. There's been some rave reviews, and I can tell you right now, that strategy is a good strategy. But oftentimes, complex solutions, they do worse than the simple approaches. And in many things, especially in trading, you really want things to be as simple as they can be, but still provide that result that you're looking for. So one of the ideas is focus on one trading method, because there's a ready access to information overload out there. Just search what is the best trading method. Emails are crammed with marketers that have found that holy grail in trading. They're still using that word. And this is actually more true in Forex. And it's becoming that way in crypto as well, these holy grail systems. But even something as simple as a simple blog post on a trading indicator, we've seen people just add it to their trading. But from personal experience, too much information can oftentimes just cripple your decision-making process. And I've personally had occasions where trading setups occurred according to my plan, but I failed to execute them. Why did I do that? Because I would start adding in other factors that had absolutely nothing to do with how I was trading at that particular time. So stuck in analyzing the market with factors I never tested, plus I'm second guessing what I'm doing, that price would just go on without me. And it's a disease when that happens. Better said, it's a dis-ease with the method that we're using because we're not seeing the results that we want. But more specifically, you're not getting the results that other traders are getting. The turtles are a great example, whether you agree with that system or not. But the point is that the system was not the main component of success, but the person using it. So when you compare your success or you gauge your potential success on someone else, that doesn't make any sense. In fact, this comparison can actually be a direct blow to your self-esteem and really give you unfair criticism of yourself. So here's a tip. You probably all know this. Much of what you see on Instagram and on Twitter is less than true. So what can we do? Well, we can pick 2 or 3 trading methods or systems that coincide with the goals, such as a day trading system or swing trading. Run a back test with some random data. And the one with potential, forward test it. And the one that fits what you're doing, that's the keeper. And you want to continue your testing and really only commit real money when you got a proven track record of success with whatever method you're choosing. And it's not going to be exact, okay? Because simulation trading, no substitute for being in the market. But it kind of does give you a framework in understanding your system of trading and the potential that might be there. The second one is you got to follow a rigid risk and trade management plan, because when you go for that big one with a position size that has you risking multiples of what your trading plan calls for, that loss is the one that's going to blow your account. At the very least, it may not blow it, but it will set in motion a pattern of just haphazard trading with a mindset of a hobbyist, not a professional. And that has little chance of success long term, right? That's one habit you don't want to have to deal with. So approach exposure in the market like a professional right from the beginning. Try not to load the boat on a trade that's destined for massive success, those sure thing trades. If your equity is pointing south, don't try to change it the next trade. right? It's not going to turn the corner right away. Realize that the market's going to be here tomorrow. You just chip away at those losses. Okay, there's another day to slowly turn that curve in the right direction, which is up. Rule of thumb, commit to 0.5 to 1% exposure per trade or something even smaller than that. Okay, just make it small enough that you can withstand blows to your account that come from stupid mistakes and trades that are just simple losers, right? Also set the amount that you're going to have for maximum account exposure across all open trades. And this, I mentioned FX again, but this is really important for FX traders because you can easily be trading 3, 4, 5 currency pairs at the same time. That's just a rule of thumb because not everyone has the same risk tolerance for themselves or their trading method. Your situation, it may call for lower or higher risk. So just ensure that whatever risk that you're using, you can withstand multiple losing trades in a row without too much of an adverse effect on your trading account. Number 3 is really important. Well, they're all important, but this one's really important. Review your trading performance every single day. Okay, this is really something you should have been doing since you cracked open your first chart. And it's so critical, and it can alert you to issues early on that can really devastate your chances of success long term. And I used to use a free screen recording software. It's called Cam Studio. And I would talk through the trades that I took. And I even did recaps of my daily performance. And I recorded them. So some questions you may want to ask yourself while that recording software is going is, did the trades follow the method that you're trading? Walk through the entire trade from start to finish. Talk about your capital exposure. Talk about, did you exit a losing trade according to your stops, or did you decide to move the stop further away from price? Ask yourself, did you stretch your profit targets based on hope and greed, or did you stick with a profit-taking plan? I'd also print out charts of setups and the completion of the trades. You just take a screen capture. You can do that, but I still prefer the hard copy. I can make notes right on the paper. I just feel better putting, pencil or pen to paper. I personally feel it had a huge difference in how I retained knowledge as I was working through my trading system. And let's be honest, these 3 things, they are so easy to do, right? And that's a good thing. But you just need the intention and the discipline to do them. Because trading it's one of those rare professions that success or failure, that's all on you. Okay? It's not the fault of your broker. It's not your charts, the talking heads, the feds, a boss if you fail. Okay? Trading doesn't discriminate. It doesn't care what sex you are. It doesn't care about the color of your skin. It doesn't care. It's up to you to decide which side of the finish line that you want to finish on and take those steps to get you there. Thanks for watching. Hit subscribe. Like this video. We'll catch up soon.